We have a story of two retailers now and how they did during the all-important holiday season. Macy's put out a disappointing update saying holiday sales were weak, especially at its underperforming stores. That has sent the stock lower, as you see there, by 7%. Meanwhile, Canadian athletic wear retailer Lululemon upgraded its fourth quarter sales and profit forecasts, which has sent the stock higher by a little bit, nearly 1%. To unpack all of this, we're joined by Morningstar senior equity analyst David Swartz. David, thanks for being with us.
Thanks for having me.
Let's start with Macy's. Would you agree that their quarter was kind of weak?
Yeah, it looks like the sales for the quarter were not strong. I don't think anybody was really too optimistic about Macy's at this point. The company's in a real transition stage. They're in the process of closing a lot of stores. Just last week, Macy's announced they're going to close about 60 stores by the end of this month. And so, Macy's has been struggling for quite a while. It has a lot of underperforming stores that need to be closed. Macy's is going to be closing 150 stores or so by the end of 2027. So, Macy's needs to upgrade a lot of its existing stores. The stores that have been upgraded are performing better, and that was the case, it appears, during the holiday period. But Macy's sales were dragged down by these weaker stores.
They have this First 50 program where they're remodeling some of their stores. Can you describe what that is, First 50?
Yeah, Macy's took about 15 of its high-performing stores and decided to make a lot of changes, including putting in more staff to have better service levels in those stores. They have moved merchandise around, expanded some sections, shrunk some other sections. So, for example, in shoes, Macy's has expanded their shoe selection. They've also made a lot of changes in merchandising. They've taken out a number of the private label brands that they've had over the years. They've put in some new ones. They're also expanding some floor space for national brands too. So Macy's has upgraded its 50 or so best performing stores and plans to bring those upgrades to other stores over the next couple years while closing the really weaker stores. So Macy's right now is in a period where they're making a lot of changes to the store base, but for now, Macy's sales continue to be pretty weak.
There has been activist pressure off and on at Macy's, and also a number of takeover attempts to take them private, which never seems to work. Where does all of that stand right now?
Yeah, so Macy's was nearly sold last year. In the middle of the year, Macy's called off the sales process. The last bid from the buyout group was $24.80, which is about $10 higher than where the stock is right now. But that deal didn't quite work out because there were some issues with financing. And then after that, Macy's again got activist pressure from a different group of investors. At this point, they have not offered to buy Macy's, but I would not be surprised at all if sometime in the next year or so, Macy's does get another buyout offer from somebody somewhere, because the stock is extremely inexpensive, in my view. My fair value estimate is $25 a share. And Macy's still owns billions of dollars of real estate. So it's very enticing for activist investors to want to go after it.
We just saw the stock of Lululemon. The company said that holiday sales were pretty strong. The stock is up today. But you see it as overvalued at these levels. Why?
Well, Lululemon's stock price is up about 75% just in the last 5 months, so it's been on a real tear. In the first half of 2024, people were very negative on it, and I had it at one point as quite a bit undervalued. But with this huge move we've seen in the last few months, I think it's expensive again. That typically is the case. Lululemon's stock price has typically been very expensive compared to most others in its space ever since it came public years ago. So that's not unusual. It's a stock that gets a premium valuation because it's a premium retailer. It consistently outperforms just about everybody else out there, and investors rewarded for that. However, there are concerns because Lululemon's North America sales growth has slowed considerably. There is a lot of potential for growth still internationally, especially in China. But it's realistically, it's going to be hard for Lululemon to maintain the kind of sales growth rates that it has in the past. And so I think that the valuation right now is quite stretched, and I probably wouldn't look to buy it unless it was cheaper than where it is today.
Pun intended on stretched, right?
Yeah.
And that leads me into leggings. Okay, so I hear this theory. This is an anecdote here that women are buying fewer leggings in favor of baggy jeans. That's a trend. Is that true? And is that, if so, is it impacting Lulu?
We have seen a move away from the tightest leggings. I don't think they're selling at quite the same volumes as they were maybe 2 or 3 years ago. But Lululemon does make a lot of new products. They have released more casual products in recent quarters. And I think that sales of those products are helping to make up for any weakness in leggings. But, you know, there's still a big market for leggings out there. It really has become part of everyday dress for a lot of women and girls. And so it is a much bigger market also than it used to be. So right now, maybe it's slowing down a little bit, but Lululemon does have a more diversified product line than it used to. And so I think that it can overcome the weakness. I think that Lululemon has to do more discounting than it has in the past. That's just the reality of the market right now. But it is still able to sell a lot of product at full price and very high margins.